Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is the Long Hill Report. I'm Richard Morco, your host, and with us is our expert resident, Mike Carnevale. And we are here to discuss the world of finance, what's happening. We're also going to do a little news because we can't avoid it. Out in the great world, we're kind of at war, kind of not at war. Supposedly, we have a great, big, beautiful peace or something with the Trump and Iran. Is that real, or is it not, Michael?
I'm betting it's not, but
I would not be shocked if it's not. I think the fact that we're heading in a breakneck pace to July, and everybody said the end of the world happens in July.
mm-hmm.
The supply chain for some really important ingredients, not just oil, gets really ruined if we don't get this settled by July. And some people, maybe not Mr. Netanyahu, but some people, maybe Mr. Trump, know it. Well, we will see. We live in interesting times, as the Chinese curse goes.
Yes, yeah. It's
All right.
Hard to believe, but
Now, Michael has some facts and figures here that, in spite of an ongoing debacle in the Middle East, we didn't have a bad month.
no. I mean, it really is amazing. I mean, if you only saw half of the picture, if you saw the stock market half, you'd say, well, everything's going great in the world. If you saw only the world picture, you'd say, oh, geez, the stock market must be in bad shape. But when you look at them combined, they kind of begin not to make sense. And May usually is a bad month, although the last 6 Mays were positive, and has 12 of the last 13. So recent history has been better than ancient history, but it's 7 Mays in a row, because May 2026 gained almost 3% for the Dow. It's about 1,400 points. And the Dow closed above 51,000 for the first time ever. The month had 5 all-time closing highs, which is pretty interesting because there's only 20 trading days in a month. So it was about almost better than 1 a week.
Throw your dart at the dartboard.
Yep. Year to date.
You almost can't miss.
Year to date, the Dow's up 6%, but the S&P's up 11, and the Nasdaq's up 16. So it's been a remarkable year for at least the first 5 months of it, in spite of, as you had mentioned, the war and all the other crazy stuff that's going on in the world and in Washington. Hasn't had an effect on the stock market.
One stock market. Well, first I'll say maybe the UFC on the White House lawn had something to do, but I'm not going to speculate.
No.
But one thing I saw, well, that we all saw, and maybe you want just mention that one man did very, very well. He became the first trillionaire in world history. So how did that factor into the stock market? It's not in one of the averages or anything, I guess.
No.
But I mean, if we're going to have such a big push, and we're also going to have wonderful month in the stock market, how real is that? I mean,
Well, it's, I think, harder and harder to explain.
that's why we have you, Mike.
Yes. Like I said, it's harder and harder to explain. Because I think, you know, certainly what's gone on with the economy, obviously the craziness in Washington and the Middle East and whatnot, you wouldn't expect the market to be doing what it's doing.
No.
So, you know, the only thing you can say is generally the market looks ahead as opposed to present or backwards.
I would hope.
So I'm hoping that the people that run the market, institutions mainly, right, feel that all this nonsense that's going on is going to end sometime, probably sometime soon, you know, within the next 2 years or 3 years. So that might be a reason why the market is done well.
When you say 2 or 3 years, how does that happen to Mr. and Mrs. America? What happens to Mr. and Mrs. America in their daily lives? I mean, we got some real problems here. I did see my tank fill for less than $4.
Yes.
So I was happy to see that.
Yeah.
But will it adjust itself? Will it take 2, 3 years for things to sort of smooth out?
I think it's going to take some time. The first possible beginning of that could be, you know, the midterm elections in November, if there's a radical shift. You know,
What could a radical shift to? Like, I mean, I don't want to really be politically. I thought this war was insane, and I thought everybody's got to think this guy's nuts. If they were serious to start a war like this, which, let's face it, we lost. In real terms, we lost.
yes, yeah.
But during the whole thing, I would think that why aren't some people saying, "Wait a minute, War Powers Act. Wait, we really got to do this on both sides of the aisle." Nada.
No.
Nothing.
No.
So when you say right itself, okay, I think the Democrats are going to win in the midterms. Probably better than they would have if he hadn't started the war. Maybe if he hadn't started the war and people felt okay, it might have all evened out. But any party that in this insanity, it wasn't saying War Powers Act, 25th Amendment, impeachment or something, didn't have the nerve to say it. And they didn't.
No, they didn't.
And actually they're voting for a lot of defense things that are not very sane. So when you say right itself, or the powers that be can do 2 years, what are they going to do in the 2 years?
Well, I think a lot's going to determine, as I said, with that midterm election, if it really goes bad for the administration, that could be the beginning of the opposition side getting a voice again. I think a lot of this happens is, and the Democrats have really put up no fight, but a lot of times, you know, you look at your own life and things happen, right? And you say, you know, you're not up in arms about all this, how come? And you say, I don't care anymore. And I think
there's a point there.
I think that's kind of maybe where they're at. In other words, They don't have the voice. They don't have the vote. So, let him do what he wants. He's not going to be there forever. And if they can get that voting back, then maybe it can shorten the time period before things, they strip the name off of all these, stop signs in airports and buildings and chisel all the gold off the White House and hopefully before the Arc de Trump gets built.
But that's not cause, that's effect.
Yeah, yeah.
And, there was a war in real time.
Yeah.
There's a supply chain disruption in real
Yeah.
time. And how do you, okay, so all right, we will do something better. What? That's what I want to know.
I don't think we know what that's going to be. But it's likely to be an improvement, a shift to, maybe to the center of arguments rather than these extreme, crazy things that are going on.
Well, it's still,
And I think the market, which is run by the institutions, I think they know that. And that's why the market hasn't really
capsized.
Because I think if you saw, hey, these are the factors. We got an administration that's whatever. We got inflation coming back. We got a war in the Middle East. What effect do you think that has on the stock market? I think if you said...
Well, you're basically saying, is that a great time?
Yes, I think if you said, well, the effect would be very negative.
You're saying
You
the
would be
future.
completely
then.
wrong.
The market, you're saying, is looking at the future.
Right, I think so.
They know, I hope they know.
It's the only thing that makes sense, really.
I hope, I think we're all hoping that that's true.
I think it, but it has to, if that to be true, it has to happen and begin in November. Because if it doesn't, then you could be, the market could then wake up and say, wait a minute, this is not going to change. And then that would cause, people to reprice all this stuff, earnings and whatnot, and what they're willing to pay for earnings, and thus what the price of this stuff is. I mean,
Well, you and I can only hope.
yeah, I mean, I think I'm less confident today than I was a month or two ago, because I think if the Iran situation is finished, and if that brings a dramatic drop in energy prices, then it may be closer in November than people think.
I would hope. I mean, somebody I think in the administration is playing with reality. I don't think anybody of another government is, but you can't let the aircraft carriers can't get too close to Iran,
Right.
or they get pawned. The Iranians knocked out all our almost all our radar, big radar, important radar, and so he probably can't really do anything.
Right.
So, okay. But it's still, what, how long is this going to be? Is this a ceasefire? So we'll be probably talking about this again.
I think so. Yeah.
So
we'll come back.
Technicals.
Yeah.
Unless you have something more to talk about in the results.
No. June is historically about the same as May, which usually isn't good, but in the world we're living in now, it's the opposite, so it is good, and we're already into June, and June looks pretty good. So, technicals, They weakened a bit. You would expect that when the market does what it did in May. You know that there's a scale from +5, which is really positive, to -5, which is really negative. It's now -3. A month ago it was -2. So you see, we're getting to the point now where, you know, I'm not saying the market's going to go down, but it may stop going up, may just kind of level off for a while. We see that in the technical indicators. They weakened a bit in the month of May, and the one that's really sticks out is the stochastic oscillator, which takes into effect the support and resistance price of a stock or an index over a short period of time. And it's graded from 0 being the best rating it could be to 100 being the worst. And a month ago it was 70, which is, you know, getting there, but still no reason to really lose sleep. But today it's 92. The worst possible reading is 100. So we're getting close to the top point. And, you know, there were a lot of people saying that if you look back in history where tops are made, it's during these times of, you know, rapid price increases by events. And is that with SpaceX, is that the topping out phase? You know, it was the topping out phase in many of these other issues. And a lot of people don't realize that, you know, you look at the Amazons, the Microsofts, the Nvidias, the Apples, they all fell 60 to 70% from their initial offering price at some point before they started making money and started, you know, moving up consistently. So the SpaceX issue is, we're just at the beginning as opposed to, you know, a midpoint. It's probably got to go down an awful lot if history's any indication of what happens to these type of issues. And so that would definitely have a negative effect on the market. So I think that's one of the things you want to watch out for.
I think most of us, because this is such a big initial offering.
Mm-hmm. World's biggest in history.
World's biggest, yeah. That most everybody thinks, yeah, it's what goes up must come down.
Yeah.
What the heck would we be thinking if it just kept going?
Kept going. Yeah.
I assure you, I'm not the guy to predict that.
Right. Yeah. No, I hear you. I think the odds are that eventually it goes down. It could go down rather quickly once it starts to drop. You know, once all the buying momentum is over. I mean, you know, it's up 60% from the initial offering price of $135 a share in just a few days. That can't go on forever. And once all the buyers aren't there, there's only sellers left, and it'll probably go down just as quick as it went up. You know.
It would be something if that didn't happen.
Yeah.
It would really be one of the most amazing
It would
things
be, yeah.
you ever saw in your
Yeah.
life.
Yes.
But yeah, we're all probably thinking it's going to go, and probably will go down.
Mm-hmm. Yeah. I mean, I think that could be the signal of the short-term top here. But the technical indicators are also saying that we're
Yeah.
probably at a topping point. But recent Mays and Junes have been good. You know, we've had 7 straight Mays up, and the last 3 Junes have been up. So, I mean, it's a fairly strong, which historically, you know, the May to October period is the weakest
You've
6
mentioned
months.
that many times.
Right. But, the last few years, that has not been the case, which ultimately is another thing to point to that maybe we are getting close to the top, because it's all good news, and it can't continue forever.
Good news.
Stock market wise,
Oh, okay.
you know, I mean, you know, the Fed meets this month, and it's the first time where we have a new Fed chair. Pressure to cut rates, but they're probably not likely to do it. And you know, the interesting thing is the new Fed chair. He got the fewest votes in the Senate of any Fed chair.
Why?
Because I think it was a political appointment.
Well, there's always some
Yeah,
political,
but
some more than others.
you know, Powell got 84 votes his first term, and then he got 80 votes his second term. Kevin Walsh got 54 votes.
Is that more an anti-Trump thing?
Yeah, I think
Because
so.
he was really pumping Walsh.
Yes.
So, okay. There's 3 or 4 different angles to everything Trump does. And whatever he says today ain't going to be what he says tomorrow and things like that. So, I think expressing hate for Trump by the low vote for Walsh.
Yeah, I'm sure that's part of it.
Walsh himself, how would you rate him?
Well, I mean,
Just as, not a politician. And
right. Well, he definitely has the qualifications. He definitely has the background. You know, you look at Powell. Usually, the chairman of the Federal Reserve has a background in economics. Powell did not have that. His background was in law.
yeah.
But he did a good job. Got us through, the financial crisis, the pandemic, and
Would we have not just gotten through the pandemic anyway?
we probably would have. But you got to give credit to the guy at the top. You
You
know.
think he had, a lot of that was during the Biden administration?
Yeah, and I
Do you
think
think he had an agenda of his own? Or
I don't think he did. I also think that, at least in his press conferences and what, you got the feeling he was listening to other voting members. The first person that, I think it was named Mirren, that Trump put, who's no longer there, he left once Walsh got a seat. He voted for at least a quarter or half point cut at every meeting. And so obviously and he was the only one. So obviously he wasn't listening to what others were saying.
Yeah.
I think Powell was listening to what others saying. Walsh, he definitely has the background. He's been on the Fed board of governors before. But he, as I said, he's got the fewest votes, and he is the wealthiest Fed
Yeah.
chairman in history.
Mary Wright.
Married right, and so it remains to be seen. He has, until he does something, you're never going to know.
Right. He hasn't done anything yet.
He doesn't. He meets the middle of the month of June, and he'll have a press conference after that, and we'll get a feel for his style, what he says, how he says it, and what his plan is for the future.
Well,
There's rumors they're going to cut out these press conferences, which would probably be negative. But they were started by Bernanke, and then Yellen continued them, and then Powell continued them. But prior to Bernanke, the Fed never had a press conference. They were just kind of, sort of like the puff of white smoke. Oh yeah, they raised the rates, and that's it. You wouldn't hear anything, and that leads to speculation and whatnot. So I think it's good that they do come out after a meeting, and number one, they explain what they did, and secondly, they let people in the media ask questions. And it's not so much what they say, but it's how they handle that.
Okay.
You know what I mean? And you can get a feel for that. Wash, we don't know. It hasn't happened yet.
Okay, so the Fed has not changed anything,
No,
and probably won't. for
not
a
likely
while,
to.
yeah. Okay. And the other banks, England, Canada, European, ECB, Australia, Israel, they all increased rates.
Australia and Israel increased rates.
Why?
Oil dropping, but it's been so volatile, you know. The end of the
Yeah,
month was 88, then it bounced to 100, now it's at 80 again, and it's almost meaningless. Production is at the highest level since middle of February, and drilling rigs are almost at the level they were a year ago, so there's been some improvement there.
Okay. Well, that's kind of good news.
Yeah, I think so.
Inflation.
Yeah, it's getting worse.
Yes.
We would expect it with energy prices as bad as they are, well above what the Fed would like to see, almost double what the Fed would like to see. So hard to see how the Fed is going to cut interest rates.
Core less food and energy. So other stuff is going up too.
Right. Just about everything's going up.
Well, how much of that is due to oil? I mean, so they deliver a loaf of bread to your store. To get it there, they have to do it in a vehicle, and that vehicle will use petroleum, and they have to pay more for the petroleum.
Yep.
So is
I think
that
that's a big, big factor.
so? That's part of the core food and energy is oil.
Yep.
Okay.
Yep. And producer prices are really going up a lot. April's number was the highest in 4 years. So eventually that's going to cross over to the consumer price index, right? Because if the producers are seeing inflation, they're not going to absorb it all. They're going to pass it on to the consumers.
Of course.
I would think that the next couple of months are going to see still heightened inflation, and that will keep the Fed from being able to, cut interest rates. I think based on these things, we'll learn more when the Fed meets the middle of June. If it isn't a unanimous vote to do nothing, they'll start to lose some, Walsh will lose some credibility because inflation has doubled.
Oh.
You can't, there's no way you can vote to cut rates. So even if 1 or 2 members vote to cut rates, it will show that the Fed chairman doesn't really have control of the group, so to speak. And that will cut into the credibility.
Well,
and that's probably the worst thing that could happen.
Do you think that Trump appointed Walsh kind of with the idea he might be a cut rate type guy?
Oh, definitely.
But reality wearing its ugly head, maybe Trump can be delirious, but I don't think anybody who has the position of Fed chair
Could be. No, not in light of what we're seeing with inflation.
If somebody did that with what we have inflation, would the other governors say, can we bring in a guy with a net?
Right. Well, and of course the president had the famous line, I love inflation.
Oh, God, that was so embarrassing. So embarrassing.
He has, this is sort of like economics 101. It makes, his statement there made no sense at all.
No.
So based on what he says, and he likes inflation, so we'll turn the economy into like Germany with a wheelbarrow full of cash to buy a gallon of gas. It makes no sense whatsoever. And coming from, the top guy, so to speak, there's something really wrong there. I think we'd be shocked if we ever got the real person.
That some haven't been worse than others. This is just.
I think we'd be shocked.
Okay. All right. Well, the leading economic indicators. What do we see?
They're down again. They have been for so long that it becomes less important. Jobless claims still look pretty good, and the employment rate, job creation is still positive. So, you know, not as good as it has been, but, you know, several of these economic indicators show that the economy is still doing pretty good. And so you wouldn't be able to cut interest rates based on, I mean, if you gave an economics class, these are the scenarios. You got an employment that's creating jobs, you got jobless claims that are below the level that could hurt the economy, and you got inflation twice as high as it should be. Would you cut rates or raise rates? Or do nothing? Well, you could make a case for raising rates, but you probably wouldn't. There's no way you could cut rates. It's
In a rational world.
In a rational world, right. So it'll be interesting to see what happens. It'd really be interesting, as I said, of what the new Fed chairman says.
Just as a thought experiment, well, not a thought, just as a life experience, if you just actually, if they did cut rates, the reaction would be something so interesting to see.
Yeah.
I don't need to see interesting things like that.
Right. I agree. I agree.
Okay. So we get the employment report.
We did.
All right. So things aren't bad. Right. Okay. Life is good.
Well, it depends on which side of it you're looking at.
All right.
There is a piece of it that is good, and that's
Well, yeah, that's what I mean.
the stock
What
market.
the heck is going on?
Right.
Yeah, but from the numbers, don't say how that's horrible.
No.
So, ladies and gentlemen, we hope you will tune in next month. This has been the happy half hour, and things are not as bad. If you enjoyed this, please like and subscribe. And Mike and I should be here next month.